Hi everybody, this is Dave Aquino with Value Charts, and this is the free video for Tuesday, January 19th, 2015. So we are looking at the markets today. It was up about 1.25% at the open, and what we actually found was the majority of the price movement occurred within the opening range of the day. So lots of times when we have price movement like we do within the opening range, most financial news reports those days as there's not much going on. We're just moving within a range, range-bound trading, stuff like that. But if you're using the techniques we teach in divergence trading, as well as the techniques I use in my Everyday Profits workshop, you actually come across a couple of great opportunities for reversals. So the first one is, you see we're moving in this general downtrend, make a low roughly at 953. Then we start to make a bounce higher. Now, what's interesting is this move, you actually have two double bottoms on this pullback. Actually, right out of the gate, from the high to the low, you get a 50% retracement right there. So that's part of the stuff that you learn in the Fibonacci trading. But this high actually marks the neckline of a double bottom formation using MQ pivots. So this is a bullish divergence, and we start to run higher. What's interesting, if you keep the opening range levels on here, this is about a 618 retracement level. Now, when we come back up, we bounce down back to the 50% retracement of this original move. We bounce back up. This is a strange looking double top. The indicators lines are showing a bearish divergence. So at this point, you could go short. And here we go. Not only do we break below the neckline here, which used to be the old 50% level, is that it goes back down to the bottom of the opening range. So you catch 65% of the opening range height with this move, and it actually breaks and goes lower. Now you can't see it, but when you compare this low to this low to this low, you actually have decreasing bearish momentum bars. Okay, basically, if you look at it, let me show you. I'm going to zoom in. This is almost like a large, a medium, and a small histogram bars. So here's the bounce again, right around the low of the opening range. We move higher, consolidate, and then make another higher high. Now, one thing that we were doing in the room right before we went on a quick break, this is a head and shoulders pattern. Left shoulder, head, right shoulder. You can see how momentum is diverging. It's actually falling. The indicator line is weakening. That's something you definitely look for on a reversal pattern like this. And here you go. You're back in the middle of the opening range, back where that swing high was. And then we fall. Where do we fall to? Back to the bottom of the opening range. You can see it here in the opening range box. Fall right back down. And then, not only do we do that, we actually retest the low. Now, when you're looking at this low, here we are about 1250. This low corresponds to the indicator line being at negative 34. The indicator line right here on this low is negative 13. That's a bullish divergence. And here we go. We're breaking up. We're back through the low of the opening range. The next target is to break the neckline right here. Here's one high. Here's second high. Here's the third high. Our target is in the middle of the opening range, right around 1888. That is the next target on that move. Again, it's range-bound trading, so to most people, they don't see the opportunities to take trades. But if you know you're going to stay between various price levels, you pay attention to what the divergence patterns look like at those price levels, and you can gauge a high probability trade, or are we going to bounce? Are we going to go through? Where's our next target? You answer those three questions, I think you stand a great chance of making some intraday profits on a range-bound type of day in which most people don't see opportunity. So I hope you enjoy that, and good luck trading. I'll see you in the trading room.